Go.
Welcome, everybody, to the Chinchilla Pickin' Podcast. It is May the 24th, 2023 at 6:53 p.m. As always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. My name is David Underwood, and I am joined today by the one and only Brandon Beaver. Brandon, how are you?
It has been way too long since I've got to hear myself talk.
Dude, I'm telling you, so if you're listening right now, you were like wondering why we've had a lot of space in between. Brandon needs to be put in the bubble was what some listeners said recommended. And I agree. But we are here. I'm not going to go into details, but we are here. We are back at it, and we are recording, right? So you're
Growing
here.
pains, man. Growing pains.
Right, dude, you're too old for growing pains, man. Now it's just pains.
Now it's just pains. Now it's just a lot of Tylenol arthritis. And
yes, that's what happens, buddy. That's what happens. Yeah. Welcome to it. Get to enjoy it after a while. So what's been happening in the world, man? Any fluff stories we want to put out here today?
Well, I guess, okay, so the big story is the debt ceiling. So I guess we have to mention the debt ceiling. So the debt ceiling.
Mention it. We're done. Okay.
So the debt ceiling. All right. Let's move on.
All right. Cool. Glad we covered that. All right, guys. Rules. Brandon and I get together 5 to 10 minutes before the show, and we tell each other what we're going to talk about. We do not actually talk about it. We save the live discussion for here on the show. I think today we actually did it in about 1 minute, and now we're rocking into it here. So Brandon, he agreed to go first. Based on what you told me, Brandon, and I've been thinking about it for like the last few minutes here. I don't know if I'm going to agree with you on. I want to see how you're going to word this out, because it's interesting, the little tease you gave me, and I'm curious to see how this is going to fit together here.
So everybody's been talking about, the potential recession and when's it going to happen. And I find it often pretty interesting that everybody starts talking about we're going to see the softening of sales, and it's going to happen. The thing is, it's already happening. We're already in it. We're not knee deep in it yet. We haven't experienced the worst of it, but we're at least at the beginning of it. So Target, Walmart, Tapestry, Bath and Body Works, Footlocker, they've all talked about sales trends in the country getting worse. Footlocker is saying they're going to have to motivate shoppers with more markdowns. They cut their full year forecast on Friday. Earnings missed expectations. They said that sales have since softened meaningfully given the tough macroeconomic backdrop. They said that now they blamed lower tax refunds and high inflation. I would think it's more in the high inflation category that people aren't spending as much on sneakers anymore. It's, all going to groceries and gas.
No. So I want to interject here. Foot Locker is not a good example to use for what you said your point was going to be. So I want to hear some of the other examples, and here's why: is that a lot of people nowadays are going to other sources for sneakers and shoes because this became a hot business a few years back, and now it's grown, and now it's a growing sector of the actual economy here. Still emergent sector, but it is growing, and I think Foot Locker is going out because of competition.
Well, they said that one of the key factors creating uncertainty for us is going to be in the back half of the year. It's already happening, though. So we're thinking that it's going to happen, but it's already happening. It's probably just going to get worse. We all need to see prices come down, he said on the call. Persistently high rates of inflation in these categories, such he's talking about staples, consumer staples and stuff like that, lasting for such a long period of time, are weighing on the families we serve. Now, Walmart, though, however, they're saying sort of the same thing. Consumers are spending on needs, not on wants. They are better positioned, in my opinion, than most big box retailers because they've got a bevy of private label brands that sell, the discount brands or whatever you want to call it. that sell for cheaper that people are going to be snatching up and are snatching up right now.
Yeah, I mean, and Walmart's a better example just because they have that wide, like you said, that wide range of things that they sell. So that's a good example to use because they do see the difference between the needs and the wants. And if they're saying on a conference call that people are not buying the wants but just the needs, that's more of a hard case for you there, I think.
Now, going on to Lowe's, CEO Marvin Ellison says the company expects a pullback in discretionary consumer spending over the near term. But once again, it's already happening. Non-discretionary appliances are at Lowe's, but listen, like if you can put off putting buying a dishwasher and deal with a less than stellar lawnmower for a year, you're gonna do it. So I mean, even their so-called staples categories aren't really, it's not like toothpaste or anything like that. Earnings per share $3.67 versus $3.44. So they did beat. Revenue was 22.35 billion versus 21.6 billion. So beat on that too. But listen, they're down year over year on this stuff. Lowe's net income for the 3-month period, $2.26 billion, $3.77 a share. This was compared with $2.3 billion or $3.51 a share a year earlier. Net sales falling 6% year over year. Still exceeded Wall Street expectations, but I think this is one of those things that, the expectations were already low. Comparable sales dropping 4.3% in the first fiscal quarter year over year, and lower than the 3.4% decline that Wall Street expected. Lowe's is the latest retailer to warn of slower sales ahead. Consumers are becoming thriftier, and Walmart, Target, and Home Depot have also noticed fewer purchases. Dave, I talk to people every day. I talk to part of my job is to call and speak to entrepreneurs and business owners every day. They're all saying the same thing. The slowdown is here. We're already dealing with it. They've got less money to spend on freight. That's why freight rates are coming down. That's why truck drivers are hurting. We're in it. It's already here. I don't care about the debt ceiling right now.
Yeah, I mean, it's already here, but here's the thing. Here's the case that I think people are talking about is that it's going to be a soft landing because does the everyday consumer feel it, like really feel like 2008 feel it, or is it just kind of like all right, we just need to be a little more thrifty right now. We'll hold off for a few months till things improve. Is that their thought process, or are they like, hey, we're really in bad shape, let's get a second job type recession here? And that's what I think that people are want to argue here. Is this a soft landing, or is this going to be a hard where we just break through inflation and go right into hard deflation and a hard recession here?
Well, I mean, it's been soft so far, but we're not done yet.
We're not done yet, but there's still plenty of jobs out there, and that's the case I'm looking at right now. I've also come on the show here, and I've talked about how there is like 1 million fewer jobs than there was before, and I've talked about how the jobs are getting fewer and fewer, and that the nice, high-paying, comfy gigs at like the Metas, the Twitters, the Googles, the big corporations of the world are disappearing, and that people are having to take the jobs that they've been passing on before, and that's what's really happening in the job market. And I've talked about that, but I think, we still have millions of open and available jobs. And so that's why people aren't feeling it and they don't see it every day, because I remember in 2008, you couldn't find a job. And that's what a lot of people my age or you would have to be, if you would, you have to be 28 years old or 26 or older, 26 years or older to have had a job during the 2008 crisis. And during that time,
everybody at the beginning, I think it felt a lot like this at the beginning of 2008. I'm not saying that's where we're going, but I feel like at the beginning of it, until the fall of Lehman Brothers and Bear Stearns, it wasn't really taken that seriously. And when the stock market crashed, I remember being in my retail sales job that I had at the time, and a company that generally had thousands of people come through it every day. and sitting there and seeing nobody in the store at all. It was eerie. It was eerie, very eerie.
Yeah, I remember that time. It was a hard time for everybody. I had to work 3 jobs, got no sleep. I met you at one of the jobs, and you just made fun of me because I was sleeping during my lunches,
I
sleeping during my
know.
breaks. I just was sleeping every chance I could.
Yeah, our boss, I remember I'd be like, Dave took his 15-minute break like 45 minutes ago. And then our boss would say, he's up in the break room. Go wake him up.
Yeah, it was hard. It was hard on me, man. But I mean, and then that's what I'm saying. Like I remember that recession, and this is nothing like it. This is very soft, very easy in comparison. But we are comparison to something that was really, really bad. So let's compare it to maybe the early '80s after that inflation, and we finally fought that inflation and brought it back down to deflation. Let's compare it to that. Do you believe that it's going to have the same effect as we did during the early '80s?
I'm going to say this without getting political. I hope it does. And I hope we can have mourning in America.
Gotcha.
That's as political as I'll get.
All right. Fair enough, man. All right. So you're using these companies' numbers, and what the companies are saying that the companies are coming on the conference call saying we have more tough times ahead. Here's how we're seeing our consumers spend their money. I like the Walmart call. That really bolsters your case there. Lowe's and Home Depot both had bad numbers. Both are saying that there's more concern coming ahead, which I worry about that because people couldn't afford to during recessions. They typically can't afford to buy new homes, so they just typically fix up their homes.
Yeah.
So that makes me a little concerned there. But I mean, they also Home Depot and Lowe's do most of their business to other businesses.
Well,
So
actually, I found out that Lowe's 75% of their business is through or not through contractors, but through DIYers. Home Depot is kind of the opposite. Home Depot's got a little bit more of the contractors on their side and stuff like that. So when the home building and stuff like that slows down, it hurts them a lot worse. Lowe's during recessions can kind of lean on the fact that people are keeping their old houses rather than buying new ones and having to do the remodel projects. Because, like I said, about 75% of their customers are DIYers. But it makes me even more concerned the fact that 75% are DIYers, and they're seeing that kind of slowdown. Every month for this quarter was down year over year. March was down over 5% for
man,
Lowe's.
man, all right, that's not good. That's not good. All right, maybe you are convincing me here that it's not going to be a soft landing. This is just the beginning of it, the tip of the iceberg, if you will.
I'm about 80% certain it won't be a soft landing. I will be happily surprised if it is.
All right. Brandon
I'm not
thinks this is
selling
the tip
anything.
of the iceberg, and we are the Titanic.
So this is kind of what I want people to do. I just want people to start building up cash reserves. I don't want anybody to sell anything, unless you bought something really stupid. Unless you bought like GameStop or Bed Bath and Beyond or whatever, or you bought something like super, overvalued. But if you bought like at the October lows and stuff like that, like, I've been doing, or like I did, then there's no real reason to sell through this. Over time, your investments are still going to go up if you made smart decisions. So no selling over this, especially don't sell over the debt ceiling.
So I'm going to say something opposite later on, but about a specific company that we talked about over the past couple months, numerous times. And I spent 20 minutes on it, breaking down the numbers. I think it was about 2 months ago we did that show where I broke down the numbers. And I would say now's the time to sell that one if you bought it when we told you to buy it.
I wonder how many people bought Amazon in like 2005, 2006, and then sold it during the crash of 2000.
Oh, well, they probably, now to be honest, they probably needed the money.
Yeah, that's probably, that's kind of the way it goes, I guess.
Yeah, you need the money, and you got to sell at a loss in order to cover your debts because you got to get through and make it through.
Yeah.
That's why you and I get on here and we defend the CEOs when they sell 1 million shares of their stock, and like the guy probably needed to pay off his house.
Yeah.
I mean, it doesn't mean that he thinks the company is going to go down. If he still holds 20 million shares and he just sold 1 million, it means he probably wanted to buy a nice house or a summer house. And, you know, there's nothing wrong with him profiting off the company he founded and ran and built up. You know, he deserves a little bit of it. So
one more thing just to add in here before I flip it over to you. Citron Research, I just sent you this message actually.
you did.
This is speculation, but Citron Research is floating the idea that LVMH might buy RH, Restoration Hardware.
And I have not been a fan of Restoration Hardware since you mentioned it. I have been hesitant. I have stayed away. I've held that position. I still hold that position. I just think there's, I don't want to get into details, but I think there's too much competition.
Yeah, there's a lot of competition there, but I think as far as luxury furniture brands, they're far ahead of everybody else. I know Warren Buffett and Berkshire Hathaway sold through their stake actually last quarter, but I'm still holding it. I think they still have a competitive edge.
Yeah, yeah. You know what? Before we get into what I have, let's spend 2 minutes on the fact that Warren Buffett sold his entire stake. Berkshire Hathaway sold their entire stake as Taiwan Semiconductors over the last quarter. The entire stake. They completely got out of that. I mean, does that strike alarm bells to you about geopolitical events maybe happening down there or not?
Or it could just be him listening to our podcast. I think he's our number one guy.
Yeah, they did announce that after like a couple weeks after we talked about that. That's a possibility. So, I mean, yeah. Thank you, Buffett and Munger. You know, we appreciate you guys listening to us and taking our advice.
And you're welcome for the Allegheny recommendation.
What we say here 2 weeks later, you'll hear Berkshire Hathaway have a press release.
I'm gonna still be talking about Allegheny for 10 years.
That was a good call. That was a good call. All right, guys, let's get into what I have here because I want to talk about it. I briefed it to Brandon. Yeah, here's what I want to go into first. I want to go into let me pull up the numbers here. This is me typing.
Have you ever heard of Allegheny before I brought it up on the show?
I did not. No, I have not heard of Allegheny before you brought it up. That was the first time.
Warren Buffett did, right?
Right.
It had to have came from me.
So let me go into this. What I'm going to talk about is NVIDIA. NVIDIA is a company that I have mentioned on the show before. And Brandon and I both have said it's a great company. It's a solid company. We like their earnings reports. We like what their CEO says on these conference calls. We like where they give their guidance. It's not always positive. And so they try to give true guidance. But I think it was about 2 months ago, I broke down the number of the exact, like their costs to build these servers that you need to run these AIs, and then how much money they were going to be making. And I broke it down on the podcast bit by bit down to the one server and then one drive, and how many drives you need to make a server and how many servers you need in order to run the AI. And I broke it down to yada, 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 and the numbers. And the first deal was signed with Microsoft for like $8 billion. And they were just going to be making money hand over fist. And they were even going to lease out these to companies who couldn't afford to buy them. You could lease them from NVIDIA. So they had a leasing aspect as well to it. So, I mean, we covered all this, and we said that it's going to be at least 2 years before anyone can compete with NVIDIA as far as using these chips to run AI. You need NVIDIA. They're the one and only big time player in here, and no one can compete right now with them in this field. And AI is so hot. So we were talking about how this is going to be, huge for NVIDIA. So let's break into their first quarter fiscal results, and let's talk a little bit about it here. Their revenue came in at $7.19 billion. So that revenue is also called the top line number or revenue. That's just how much total cash they brought in, 7.192. Let's talk about their operating expenses was 2.5 billion, operating income 2.1. So their net income ended up being $2 billion for first quarter, which is not bad for a first quarter, man. I really like that. Here's where we break it down, right? So the revenue by the market platform. So they separate this out. So for the gaming revenue, that came in at $2.24 billion, which is actually down 38% from 1 year ago. So that's a huge loss right there in the gaming revenue. But Brandon and I have talked about this. NVIDIA's chips were being used for a lot of VR last year, and VR was exploding. I covered how the Oculus headset for 1 month jumped into third place on the console gaming rankings just for 1 month, but it did jump in. And I think NVIDIA had a big surge from that. NVIDIA had a big surge from the 2020 COVID, people staying at home playing games and wanting to get the newest game systems. And it really took off. And so to be down 38%, it's a big loss, right? So where were they going to make that up at was NVIDIA made it up in the data center. So that's the AI. That's that aspect that we're talking about as far as how much they're going to be charging. They pulled in $4.284 billion from just the data center aspect of the business, which is really where they're going to see the growth going into the future here. It's up 14% from a year ago. And it's really from the demand for AI and what's going on with AI and everything with AI. It's just all AI. When I read through this, I'm just like, man, this is just nothing but AI here. And it is crazy how many billions of dollars they're going to have coming in here for this. They have free cash flow of $2.64 billion compared to 1.3 a year ago. So they've doubled their free cash flow. And then their cash flow from operating activities was 2.9 billion. So that's up by 1.7 billion from a year ago. Again, their cash is just growing immensely, and they're having a hard time. I believe their biggest problem right now is keeping up with demand, trying to build these servers and these chips as fast as possible so they could get them out there because everybody's really wanting these. I'm going to take a break from talking right now, Brandon. Give me some of your first thoughts from these numbers I'm throwing out.
If you bought this back at the end of December, you are now up close to 140%.
Yeah. Outrageous.
The stock is they are now at all-time highs again. Close to a $1 trillion market cap. 130% over the past 12 months. In this environment, that's impressive.
Yeah, I mean,
today's 24% of that.
Right. We had a listener reach out to us on Instagram and DM me, and I responded, and he asked, like, what's the one company that you would recommend me? And I was like, NVIDIA. Just buy NVIDIA and hold it, man. He wanted a long-term investment. I said, buy NVIDIA and hold it, man. You can't lose. And this is just more proof of that. And it's a monster company because right now they're positioned so perfectly to make money off of all this AI that's just out there, and everybody's talking about Chat GPT and AI this. And let me go into some of their some of their partnerships here, right? So under the data center aspect, they expanded its partner offerings, new products and services. And it's all based off the NVIDIA H100 Tensor Core GPU. That's what we talked about before in our podcast. Please go back and listen to it. So here's four of these companies that use this NVIDIA H100 Tensor Core. Ready? Amazon Web Services, Google Cloud, Microsoft Azure, and Oracle Cloud Infrastructure. I mean, you can't get bigger customers than that for a server drive or computer technology. That's the top. That's the biggest companies in the world that are your customers.
So would you buy it right now if you didn't have a position in there already?
No, it gapped up. If you didn't have a position already, I would know. It just gapped up a lot. So after let me check on the current price right now. Hold on, because after is it 380?
Yeah.
Yeah, so at the bell it was 300. So it jumped up $80 a share after the bell. So no, I would not buy this right now. That's a big gap up. If you don't know what a gap up is, let me explain that for people. When we use the term gap up, gap down, it just means like a gap in the stock in the chart, right? Mm-hmm. So a chart, if you see a stock at $2 and then all of a sudden you see a big giant gap and the line starts again at 10, that means that stock just took a big jump up really quickly. So anytime you typically see a big gap up, usually the stock does a little bit of pullback because there's going to be a lot of profit taken. There's going to be a lot of people saying, hey, I just made a ton of money. Let me take some money off the table here. I don't need to be as invested as I was. So typically you'll see it drop back down a little bit. So you want to be wary of big gaps up. We also, on this show, we call it chasing the dragon.
Yeah.
And that's when like a stock jumps up quite a bit. And then everybody's like, well, it's going to go up even higher now, right? I should buy in. No, that's chasing the dragon. That's the wrong type of thought. Now, if you do your research on the company and you believe that that you sincerely believe the microeconomic situation is there and the fundamental situation is there to prove that it's going to be worth more. Like you look at the PE numbers, you look at the growth here, where's this at in comparison? And you believe that it should be worth more than where it's at, then go ahead and buy in. But at 380, no, I think it's going to drop back down. I think it'll probably settle around 350 tomorrow morning. It's going to drop back down in the morning time. Pre-market tomorrow is when it'll drop.
It'll still say it's up because this is, after the bell.
Yes.
So it'll still show up like 15-20% or whatever, but.
Right. So, I mean, let me talk about a few other things that you had that most people probably had no idea about NVIDIA. First off, I want to make this just because Brandon and I are both gamers and we love talking about gamers anytime we can. So NVIDIA made path tracing available for the first time on major gaming title. They did this with a game called Cyberpunk 2077. So if you're a gamer, you know what that game is. And they just made a huge update to that. And thank you, NVIDIA, for making gaming fun for a lot of us. Appreciate that. But automotive-wise, I don't know if you guys are aware, NVIDIA also has chips, and because they're graphic chips. That's what they specialize in, is graphic chips for gaming and other things. So as an automotive, if you have an electric car and you want it to just self-drive, their graphic chips would be a perfect addendum to it. So they are making money off of automotive. Let me see if I can find the exact number. They pulled in $296 million off of automotive chips alone just for last quarter. So that's a big aspect of the business that I did not know was quite that big just yet. I knew that they were trying to make moves in there, but there's a lot of other companies that are already in that space for automotive technology. Apple's trying to get their own for their own Apple car. I know Tesla's partnered with a few other companies. I know one company that we've mentioned on the show before, Microvision, is trying to add their part to that aspect as well. So there's a lot of companies that are out there already doing this. So I'm surprised that NVIDIA has even that much of a share of the automotive field. It's really surprising to me. Brandon, thoughts?
I mean, it's not really everything's going, digital these days. So, I mean, computers have been in cars for decades now, and there's just going to be more automated everything.
Fair enough, man. So here's something I want to point out. Part of their operating expenses is stock-based compensation expense. So how well do they take care of their employees is how I look at this. So how much stock are they giving to their employees? $708 million. I hope that is not all going to the top. I hope a lot of the workers in the plants and manufacturing plants are getting shares as well. So I'm happy to see a company have an expense where they're paying their employees with stock and giving it out to them.
Yeah, me too.
That means you're taking care of your employees, and that means those employees are going to be happy to continue working and build that company up.
And it's incentive.
It is.
When you have a stock program for your employees, it gives them a piece of the company.
Yep, exactly. So what I'm taking out of this earnings report is NVIDIA is exactly what Brandon and I have been talking about. It's a strong company, great future. They're positioned perfect for AI right now. Like I said before, and I think it was even our last podcast, I said any competitors are at least 2 years out of competing head to head with NVIDIA on this. They just had the infrastructure in place. And with their infrastructure, they're having a hard time keeping up with orders. So that tells you that they're going to continue to make money at a high pace here. I'm just worried about the growth I mean, how many times earnings to, I mean, is it like 50 times earnings to growth, 100 times earnings growth at 380 a share? I know it's got to be high up there. And I
It's
don't
near
think,
200.
yeah. So I think that's got to come back down a little to a little more realistic level before I would buy in if you haven't already bought in. If
Yeah.
you have bought in before, like a couple months back when we first were mentioning these numbers, I think right now is a good time to take some profit off the table for me. Unless you're a long-term investor, you want to leave it for your kids, then just leave it in there. But if it was me, I would take some of my profit off and then just leave my principal in there and go play with my profit. But that's just how I operate. Not Brandon doesn't operate that way. He operates different than me. So two different aspects.
On this one, though, I think this would be a little too bubblicious for me.
So you would take some profit off as well.
Yeah, at this moment in time.
Trim the fat, if you will. Fair enough. All right, so let's move into my next little story here. Again, this has to do with AI. What a surprise. We're going to stay on this topic of AI and everything going on. This is going to be about Google and AI. So Google is positioned well for the AI
Alphabet.
Alphabet is positioned well for the AI aspect of making money off of AI and having a lot of products for the consumer base and not just businesses, right? But a headline that caught my attention, and I don't, this is on CNBC, so this is one that everybody should have read if you listen to the show at all. Alphabet CEO promises AI pact and discussed concerns about a pro-Kremlin propaganda in a meeting with top EU officials. So I was like, okay, what are they trying to get here, right? So I start reading through the article, and what this article is about is how Alphabet is saying that they want to self-regulate before the EU comes out with rules on AI, because right now there are no rules for the most part on anything to do with AI. And Alphabet has seen in the past with other new things coming out, search engines, Facebook, Twitter, everything comes out. Eventually the EU comes out with rules and says, hey, you can't do this, can't do that. And they start censoring. So Alphabet wants to get ahead of this. And so they got together with all the major companies in Europe and around the world, and they're trying to come up with a signed pact or agreement now that will not be as stringent as, say, an EU regulations later on, so that the EU will back off and focus on other areas rather than get into them. And so looking at that aspect of it, I mean, I think, I don't know if this is going to keep the EU, the European Union, away from really still coming down on them, regulating them, put them in court cases and lawsuit cases. They're way more stringent. I think the EU is I wouldn't say they're close to China as far as how stringent they are, but they are getting up there, because they almost didn't let Microsoft and Activision go through, but they finally let that go through after
Odd that they
over a year.
they let it go through, but the UK didn't. It was just
Right.
so on.
And I mean, the US, we are so much less regulated than the EU on a lot of areas. And I think Google's doing this to try to get ahead of the curve, but I don't think it's going to work. I think they're still going to come after them, but they're going to wait and see what happens with AI first. How does this affect everybody? How is this being used? What are the dangers before the EU comes out? And so I don't think you buy or sell Google based off of this news at all, one way or another. You still, if you're going to buy or sell it, you buy or sell it based off the fundamentals,
which are good.
Yeah, they are good. They are strong, and it has a good future. And I like where AI is going. Their profit margin on the search engine is outrageous, even though they're getting a lot more competition for it. But I still think they own a large percentage of the market, and they make it the profit margins. You can't beat it, man. You can't beat it.
Yeah.
So it's a good company still. Even though it's at, I believe, all-time highs, I still think it has plenty of room for growth as it continues to expand all over.
Google and Facebook are about to see a huge growth in political ad spending in ways that I don't think that they've seen before. I don't have the numbers in front of me right now, so I don't I may be wrong about this, but I believe it was $2 billion that the Biden administration has already spent on political ads for Facebook and Google already. And that's just the Biden administration. So, I mean, in the past, this has been it's been huge numbers in the past, but it's been kind of small potatoes. I don't think it's going to be small potatoes this time.
So you're saying it's about time I delete my social media apps for the next year.
You just got back on Facebook.
I did, and I might need to delete it again because I don't want to see any of these ads. But yes, you are right. We are going to see a lot of these ads starting next year.
Yeah. It's going to be
this year.
It's going to be really annoying.
Yeah, we are going to get tired of it. But I mean, it's going to be like you said, it's going to be profitable for Facebook and Google and such. And so they're going to make money off of it. And we're going to see. And so you're saying, is it a time to buy Meta based off that, do you think? Off that alone, would you buy Meta?
No, not off that alone. Not off that alone.
How about coupled with the they finished all their layoffs, so now they're a leaner company. Would you do it with that?
Let me look real quick. I own the stock and I don't even know.
You do own the stock. Don't you know where your holdings are, Brandon? Come on now. You're meant to be a professional here.
Okay, so
paid the podcast.
Let me say this. If you buy this right now and you have the patience to hold it for 10 years, you're not going to regret it. I am going to still, even though I own the stock, I'm going to err on what I've been saying and tell you not to buy any stocks right now. Build your cash reserves. I think there's a good chance that we're going back to October lows.
Really? October lows, huh?
Yeah.
Wow.
Yeah. Now, by all means, if there's other stocks out there that you think are, cheap enough to get into, then still go ahead and do it. But I mean, a price earnings ratio as 30 for Meta, that's not super high, but it's just it's fairly valued. So why wouldn't you wait until something is undervalued to buy it? Why, patience is paid in the market. Patience gets paid in the market. That's what I want to say. I own it. I'm not selling it, but I bought it at a good price. So I'm hanging on to it, but I don't want anybody buying it right now. I just don't think it makes any sense. I think you're going to have much better opportunities in the coming months.
After we hit our lows.
Yeah.
That you're calling.
Yep.
All right. Fair enough, man. Fair enough. I don't know if I agree with you, but all right. Final thoughts, Brandon, as you're twisting your mustache?
I'm going to be a gunslinger, Dave. I'm going to twist it.
He plays way too much Red Dead. If you're listening to our show and you haven't heard me talk about his Red Dead obsession, plays way too much. Final thoughts.
NBA lately, which, by the way, wow, the Heat. 8 seeds and up 3-1 against the Celtics and probably going to the finals. That's pretty cool. Go ahead, Dave.
Final thoughts, Brandon.
Final thoughts. I just don't think that we've seen the lows yet. I think that we're in the beginning of a recession here. I don't think it'll be a soft landing. I still have some hope that it will be, but I don't think it will be. So I think you just kind of sit on your cash right now. I'm not selling anything because of this. If I could go back in time to 2007, Brandon, I would yell at myself to not sell anything during the 2008 crisis that I bought. That was, a good investment. So why would I sell anything going into this? 10, 20 years out from now, if that's your time horizon, I really think that like a good way to not only double but triple and quadruple your money is to hold good investments for long periods of time.
Gotcha. All right, fair enough. Well, my final thoughts.
Unless you want to jump on TikTok and follow the triple, double falling star wedge patterns that are on fire or whatever, but then you'll go broke, so that's fine.
Yeah, and all right, yeah. Don't get me on the TikTok stock guys rant because I will tear those guys up. And I've challenged him here on the show. I said, put us up against any one of them, and we'll call stocks, and you guys can see who does better. Right. We'll pick stocks, and I guarantee you, we'll do better.
Yeah, we will. There's a difference.
In fact, if they're listening and they beat us, I will buy them a pair of Ray-Ban Stories Facebook glasses.
Over time, listen, you have to recognize the fact that there's a difference between luck and skill. And eventually those who are lucky are going to lose all of their money.
Yes, every time. All right. My final thought, guys, if you had bought NVIDIA when we were calling it out, I would say take some profit off the table. There's nothing wrong with doing that, especially from time to time. You got to enjoy some of the hard work and investment and research you've put into these type of situations. Keep looking at AI. Google, I think, is still a good long-term investment. They're going to continue to innovate and improve and be a big player in the future. But just look at these earnings reports from time to time. You could click on them. It takes you over there. I think it's like the Edgar site or something that's always on. I don't know what that site is, but it breaks it down and you can read into these reports a little more. And that's what Brandon and I do all the time. So do your research, see where these companies' money is being spent, and find out and ask questions. Because the more questions you ask, probably the smarter you'll become, is what I always like to say. So having said that, that's all I got. I don't really have any calls going into next week. I'm just in a holding pattern on most of my stocks that I own right now. I don't have any big option plays or anything. The last one I had was Icon, and we did very well with that if you played with me on that one. But then I realized that that was a true short sell needed, because Icon was hiding some bad numbers there, Brandon. Just FYI.
Was he really?
Yeah, he was
Let
really
me
hiding some
make
bad
this
numbers.
call real quick. If you want to dabble and dip a little bit into Disney right now, where it's at after being beaten down, I would be okay with that.
Oh, there we go. All right, guys. Well, as always, we hope we've been entertaining, educational, and uplifting, because we want everyone to make money. You guys have a good night.
Have a good night.